Hi guys, this is Cash Pivots Part 2. If you haven't seen Part 1, check on the screen now. You'll see the link to Part 1. Talk about cash pivots, why they're necessary and how really good they are. This one is about adding some more value. So working around cash pivots, I'm going to show you first how to close the gap in the market. Nice trade. Secondly, how to identify a breakaway in the market using pivots, not only price action. Thirdly, I'm going to show you how to identify the market is exhausted. And if you stay to the very end, I will show you how to find the ATR and where to go get the ATR very, very easily. And without further ado, let's go and jump into the charts and show you how to mine the gap, how to find a breakaway and understand the exhaustion count and a possible trade there also. Right, so this is the FTSE. We've been trading that today. I'll just put the pivots on, show the pivots. So here we are, here are all the pivots. So a couple of things to point out. We're going to have a look at the FTSE and we're going to have a look at the DAX. So FTSE, this is May 10th, Friday. So what we've got here is a closing gap. We've got the close here. And as you can see, coming from 8 o'clock in the morning, from here, we have a piece of action. In other words, an area in the market that hasn't been traded from all the way down here to down here. So we've got a gap in the market. The Asia Pacific market and the American market dragged the FTSE up from its close from yesterday on the 9th. And all this action is the American market after hours and the Asia Pacific market pulling the market up. The market opened at 7 o'clock, came down, and as you can see, it front run the daily high, which is the extreme gap. In other words, we've got the close and the high of the day. If the market didn't even come down to the high of the day, we call that an X gap or an extreme gap. But so the market came down and did not touch the close. So at the moment, we have a hole in the market. If I can just put this correctly, a hole in the market here can illustrate here that really does need to get closed. Generally, these holes in the market, if you write them down and identify them, if they're not closed within the day of origin, it's generally closed within 3 days. So there's a piece of market there, price action, that has not been traded in cash hours, so that needs to be closed. So that is minding the gap, closing the gap trade. The other things that we want to be looking at is a breakaway trade. So a breakaway trade would identify as a Camarella R4 or Camarella breakout long, as we talked about in part 1 of the cash pivots. So if the market breaks up above C-ball, then generally we can trade C-ball, a break of C-ball, stop under the swing low and trade that up until the next big highs, which you can see which is R3 here. So roughly 10 pip, a 10 pip stop and 40 pip target. So 1 to 4 risk reward ratio there. I'll just turn the fractals off because they're getting in the way. There we are, it's nice and clear now. So Camarella breakout long, boom, we can trade that as a breakaway to the top side. So closing the gap, mind the gap, watch for that every day. If we get a breakout and the market's bullish, the way we know the market is bullish on day trading is that we look at the 4-hour 200 EMA, and if we're trading above that, then the market is said to be bullish. If this is a 200 EMA here, if we can get lots of time frames between 4 hours down to 15 minutes, all saying bullish, which this is, and this is a screaming trade going long. We've got a line here, all-time record high for the FTSE, but because it's a breakaway, it's broken away. So we can go with that breakaway trade. So that's good. The third element here would be if the market's exhausted. And we know the market's on an exhaustive count, generally speaking, if it goes to an R3, which is here, R3, the market will go barreling up to R3 and then it will reverse. And what we're looking at here is if the market comes barreling up to here, we'll be looking for something between 8 and 10 pip stop, depending on the average true range for the day. We take a 15% of the average true range. And if you stay to the very end, I'll show you how to calculate that. Very easy indeed. So if we look here, we'll take a, as the market's barreling up, this is an exhaustive count, so we expect the market to give us a bit of a reversal. So we set a short trade into an R3, or in the other direction, of course, if it's an S3, we take a bounce off an S3. We take a stop, generally 9 to 10 pips. Today it's 9 pips. So we have no, it isn't. It's 10 pips today. So we have a 10 pips up here roughly. The market comes down to 10 pips again. So we take a 1% trade, boom, coming down. You could always, on an R3 trade as well, keep your stop above here. And let's see how far you can make the market come down. So that is closing the gap, Camarilla breakout long, R4, a breakaway going with the trend. And as the trend exhausts into an R3, you often get the market bounce. Now let's have a look at the DAX. The DAX. Come on. We're obviously in the DAX already. I'll just turn that off. You can see we're making some rupees there, which is quite nice. You don't want to see us making money. Turn that off here. So again, we have a gap in the market. We've got a close here that has not been traded. Market came down this morning. And the interesting thing here is the market never come down to the daily high. So that's what's known as an extreme gap, which usually gets filled within 3 days. This is Friday the 10th of May. So watch this and you'll find in the next day or two that gap will get closed. Market come barreling on here up to Camarilla breakout long. As you can see, it broke away and it stopped at an R2 pivot. The interesting thing here is it's broken an all-time record high again, broken away here. And as you can see, the market then reversed and came down. We're now testing Camarilla breakout long for another potential break to the top side. It is a Friday afternoon, and generally the DAX, if it's positive, will rally hard into 4:30 into the afternoon. So keep an eye on that, and you'll give us some feedback on that. We'll often find that does break away. So what we've done is we've looked at closing the gap using the pivots. We've looked at potential breakaway trades. And thirdly, we've also looked at market exhaustions. And every time we've hit these pivots on breakaways and exhaustions, we use ATR. So I said I'd show you the bonus. The bonus and the extra value on here is go to investing.com. I'll just pull this up, investing.com. This is what I use, investing.com. And once you're in investing.com, go to the charts, live charts, and click live charts. This is all free. And once you get into live charts, you will see a blank chart here, and you can put up anything you want. All Forex indices, shares, futures, cryptos, etc. But it's all free. You can set yourself an account here free, and then what you can do once you've got an account, you can preset some of the markets that you like. So I'll just expand this a little bit by hitting these arrows, so it makes it look a bit larger. on the screen. And then I've saved some previous ATR checks. So ATR checks and the markets that I generally like to trade. We've got the FTSE, we've got the DAX, we've got the ASX, the Dow Jones, the S&P, and the NASDAQ. All I do is put the ATR indicators. You can see it's a trading view type scenario. Put the ATR, set it to 5. When you see the ATR, today it's coming up at 70.24. That is the 5-day average true range. In other words, the fluctuation of the market going up and down over the 5 days. Times that by 15%, and you will come up with a figure. That figure, the 15% ATR, is the figure that you want to use for bouncing off the pivots. So hope you enjoyed that, and hope that was useful to you. And use the cash pivots. They are very powerful. 3 easy trades there to put into your repertoire to make you more consistent. Hope you enjoyed that. It's all very quick and fast action. So what I would suggest is rewind back to the beginning and watch it again. Make sure that you write down all the little tips and things we've talked about on the ATR. And if you like the video, give it a thumbs up. That would be great. Even better if you like and subscribe to the channel. It helps my channel and I really appreciate it. Thank you very much. Bye-bye.